Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. A 36-hour monetary policy rollercoaster begins this week with the Federal Reserve's expected interest rate cut on Wednesday, aiming for a rare soft landing of the US economy, and culminating on Friday with the Bank of Japan's first meeting since it's raised its borrowing cost and sparked a global sell-off. China's economic trouble seems to be far from over, with the industrial output in its longest losing streak since 2021, casting doubts on achieving the official 5% growth rate. So there are a lot of things to chew on. Good morning, JK. Ahead of the Fed's anticipated rate cut, there's noticeable weakness in the US dollar against the Asian FX basket. Do you think the Friday's appreciation of INR can carry on this week?
Hey, good morning, Swaraj. See, I have my own doubts whether the overall dollar itself will be weakening further from these levels. Uh, and with for dollar rupee main Q coming from the global moves, I think that very unlikely that we are going to break this, a range of several months between 83.75 and 84. Uh, and we know that even large flows have been absorbed by RBI at even levels above 83.80. There needs to be some strong shift in the market themes or market direction on the lower side for the dollar to see dollar rupee also coming down. Otherwise, I don't see that appreciation trend to be changing for the dollar. Yes, overall, it's definitely a very big week for the markets because, as you said, there are three central banks that are meeting. First, on the Fed, which comes with its decision on Wednesday night. The decision on whether it is zero point 0.5 is 0.25 is the most talked about aspect in the market, and zero point 0.5 is the currently evenly discounted expectation as per the CME forecast. However, even according to well-known journalist from Wall Street Journal, it is still a toss-up for the Fed. It's not a given that zero point 0.5 is going to happen, and we did not have any data since the last inflation in July, that or the unemployment data of July, that things have deteriorated much further, that Fed should be going for a hefty cut. Secondly, even if I think that the economy is headed for a recession, at least there is no evidence as of now, because if you look at the forecast by and New York Fed, the latest revision shows 2.6% growth for Q3 and 2.2% growth for Q4, and these are much better rates than the major global economies, just still struggling. So therefore, I don't think Fed has a very strong case based on the data to go for a hefty cut, but they may still do it if they feel, or if they have more data than what we are seeing now, and if they feel that we need to do a preemptive action. That is the only thing that can guide a 0.5% cut. Otherwise, I still prefer 0.25 cut, and I would rather go by what Mr. Waller, one of the current Fed members, said after the last CPI number. And the market's expectations have risen because one of the former member of the Fed, Mr. Dudley, said that one should expect a 0.5% cut, or rather 0.5% cut is what the Fed should go for. That is his view. But Fed members are not currently talking because they are in a blackout period. So that's about the Fed. And as for others, I think between Bank of England and Bank of Japan, obviously Bank of Japan takes a bigger focus because the last meeting they hiked the rate, and that led to uh, uh, you know a big volatility in the dollar against the yen and also in the stock market. They are still on the hiking path, but possibly this month, I think they are not going to hike, and the action will be preserved for the next meeting by the BOJ. Therefore, to that extent, markets should not be very, very volatile. Bank of England, till last week, expectation was that they would not be changing the rates, but since then we have had several data points from UK economy that shows weakness, and I wouldn't be surprised if there is a cut by Bank of England also by 0.25, and that is not discounted by most of the market. Therefore, that can lead to some softness in the pound as well. But overall, there was not much data on Friday, excepting the preliminary survey on Michigan consumer sentiment, and that showed really a very marked improvement on the overall consumer sentiment and current conditions, as well as the future expectations, and and also the inflation expectations was slightly down by 0.1%. So that's not a surprise. Um, but uh, long-term inflation expectations are still high. So these are the only things that market had to chew about on Friday. That's why we found the market did not move much as far as uh, the yields are concerned. Yields are currently still trading at the low multi-month lows. Dollar is trading at near, not very far from the 1 year low, and then the stock markets have recovered very smartly last week. Dow is closest to its all-time high, and other markets have mostly recovered all of their previous week's losses. Yes, I think all eyes are on Fed, and as far as the dollar is concerned, I think 0.5% is also one can argue either side, but I think 0.5% is a well discounted move. Even if it does happen, we may have a knee-jerk further move in the dollar, maybe test 100. But I think unless we are seeing a big sell-off with the central bank diversification moves or anything like that, I think market is somewhat well positioned for this move by the Fed. Otherwise, if we are to get another move lower, it has to be some dovish statement from Fed for the future meetings, or what they are likely to do in the rest of the year. I mean, I feel this next moves in by the Fed will be mostly data dependent. And this month we also have the economic projections by the Fed, as well as the dot plot. So we will have more clues to discuss about post the Fed meeting. So overall, my sense is that dollar is possibly at a level from where it can have a period of consolidation or even a good bounce, based on the fact that the this is a well discounted move, as well as the US economy is still expected to do not as badly as market has been forecasting. Recession looks very, very far away. So that's my view on the overall dollar. On the on the weekend, we also had Chinese data. As you said, the industrial production, retail sales, they all again down, and that's not a good sign for the global markets, because that keeps the commodities once again on the defensive side. And we also had data showing the unemployment rate inching up to 5.3% from 5.2% in August in China. And even if you look at the flows, there has been a big drop in the FDI flows for China from 1 year ago. It was more than 30% drop has been seen. So flow wise also, Chinese yuan is not getting any support, but it has moved lower from 7.28 to 7.10, purely based on expectation of rate cuts by the US. Today's China holiday. Therefore, we might see the impact of the weekend data from Chinese market tomorrow. But I feel we are closer to bottom in China yuan, at least for the time being. Overall, I think dollar is going to consolidate in the next 2 3 days, and we likely have bigger move or a more directional move after the Fed meeting. BOJ and BOE taking second fiddle to the Fed decision. So that is the view for the day. Thank you.
Thank you, JK. And of course, it seems going into the Fed week, still opinions are divided about the quantum of rate cuts, whether it be 50 or 25 basis point cuts. But for a 50 basis point cuts, there are no economic signs for the Fed because it's a hefty cut, and even there is no evidence of the US economy going into a recession. So it remains dicey. For rupee, of course, large flows have been absorbed by the central bank, and only a large shift in the overall dollar trend would result in substantial appreciation for the rupee. On the BOJ front, on Friday, it is expected they won't be hiking this meeting, possibly reserving the move for the next meeting. So that's it from us today. Do tune in tomorrow, and this week is going to be crucial for the market. So keep tuning in for the latest in the financial markets. Thanks for listening.